Buying your first home, refinancing, improving your credit score, buying an investment property, or even home design tips. We got you covered.
Welcome to Mortgage Matters, a show where we talk about refinancing, home buying, and mortgage tips by Shashank Shekhar, the CEO of Arcus Lending. Welcome back, Shashank.
Thank you, Kritika.
Now, in tonight's episode, we're going to talk about there are several challenges faced by first-time home buyers, move-up, or second-time home buyers. So now, starting tonight's show, I want to talk to you about what are some of the challenges that first-time home buyers have to go through.
That's right, and we talked about in episode 1 as well. We were talking about how much of opportunity 2017 presents to home buyers. So I think it's a logical question to talk about that. If they are thinking of buying, if 2017 is a really good year to buy, what are some of the challenges that they can expect that they will face during this process? The number one challenge that I have seen, Kritika, and market stats backs that kind of assumption that I have, is the challenge with down payment. First-time home buyers typically have worked only for a few years. They are a younger audience. And they haven't been able to save enough where they think that they are ready to buy a home. Most people have this misconception that they need to have 20% down payment before they can buy a home. So that, I find that as the number one challenge, the fact that they have lack of down payment. They don't have enough savings to buy a home. The second challenge is around credit. Again, some of these people have just started working. They don't have established credit. They haven't had credit history for a very long time. Sometimes they could be immigrants. They just moved out from a different country. They moved in to US. And again, they don't have a very long credit history because of the fact that they have been new in the country. The third challenge I find is the immigration status. So those people who have just came into the country or have been here only for a short period of time, maybe they don't have a green card yet. Maybe they're not citizens yet. They're on a work visa or an EAD, and that seems to be a challenge for a lot of people. So really those three things, and even with those three things, I think the number one reason why people are anxious or curious or they're not taking that step to buying their first home is just the lack of information. So they have all these challenges, but probably they don't know that they can still buy in spite of those challenges. And so lack of education, lack of true information, right information out there, that's something which is lacking, or they are not really trying to learn that from experts and people who can teach that. So those, I would say, are some of the top challenges for people who are thinking of buying a home either in 2017 or beyond.
Well, then we have the specialists right here. Talk to them, tell them about what they can do if they're first-time home buyers.
Sure. So let's take some of those challenges, okay? We first talked about down payment challenge, right? We said that a lot of people think that 20% down payment is what is required when you're thinking to buy a home. And that's completely a misconception. There are several loan programs available for first-time home buyers where they can buy with, in some cases, even as little as 0% down. They really don't have to put any money down and they can buy a home. There are loan programs for that. Even mainstream loan programs, which most people would be able to qualify for, even there they would need 3% down or 5% down, or in some higher priced counties, say coastal towns like New York and California towns. Even there, they can buy really expensive homes for like say 10% down. So that's on the down payment. Let's talk about the other challenge we talked about, which is the immigration issue, because of which you may have a lesser credit history. Again, when people think of credit history, people think that they need to have a very long established credit history. But in most cases, most loan programs only requires 2 years credit history. I have done loans where people have had less than a year credit history, 10 months, 12 months, 14 months, 16 months, so less than 2 years credit history. And we have been able to do those loan programs because of the special loan programs we have. And then the issue about the immigration status. Again, H-1B and EADs, most loan programs are available to H-1B and EADs. You don't have to have a green card. You don't need to have citizenship if you're trying to qualify for those loan programs. And finally, the challenge of education itself. And that's something that probably the entire industry needs to work on, because I personally believe that we are keeping hundreds and thousands of potential home buyers out of the market because we are not providing them the education that they can afford to buy a home. And that's what, as in we at Arcus Lending, that has been my mission since I started Arcus Lending. I wrote my first book on first-time home buying way back in 2010. And my blogs, whether it's my blogs or radio shows or webinars or everything else that we do, is primarily targeted towards first-time home buyers, because we believe that they are the ones who need the education the most. Because once you have bought a home and you're trying to buy, say, a second home or trying to refinance, you have gone through that process once already, and so it's easier for you to probably take that decision. So lack of education is something that, of course, me or Arcus Lending alone cannot do that. The entire industry has to come together. But what the home buyers can do is reach out to some of the respected blogs or websites or shows like this, where they can get information about how they can buy their first home.
So you don't have to have green card in order to buy your first home?
Absolutely. So there are two things here. One, we are talking about financial qualification of buying a home. The other is just the emotional part of it.
Yeah.
By emotional or psychological, what I mean is that sometimes people are circumspect. They're on H-1B or EAD, they have been in the country 3-4 years. They do not know if their green card application will go through. If that's the case, then you don't want to buy a home. What if your H-1B does not get extended?
Yeah.
What if your green card is not approved? If that's the case, that's a completely different challenge. And that's something that I as a lender cannot address. As in, if you're not sure your green card application will go through, then you should be circumspect. Maybe you should not be buying that home. But when it comes to loan qualification, which is what I can talk about because I'm a lender, we really don't differentiate between people who are, say, citizens or are permanent residents or are on H-1B. We pretty much all or most of our loan programs are available to all the three category of immigrants. So really, you don't have to wait for a green card to come in if you're thinking of buying either your first home or any other home.
Well, we'll continue our conversation on first-time home buyers, second-time home buyers, and move up in Mortgage Matters. Welcome back to Mortgage Matters. Before we went to the break, we were talking about the challenges faced by the first-time home buyers. But Shashank, now I want to talk about the second-time home buyers. What are some of the challenges that they have to go through since they've already owned a house?
So surprising as it may sound, as in they have similar kind of challenges, especially on the down payment front. So you would think that we talked about the fact that first-time home buyers typically are either working for too little a period of time or they're newer to the country and that's why they haven't saved enough.
Yeah.
The challenge with second-time home buyers, meaning home buyers who already own a home and then they're thinking of, say, maybe buying a bigger home because maybe they have kids now, maybe they need a bigger home and they want to move into a new neighborhood. The down payment for them could still be a challenge because of two reasons. One, that a lot of their money could be stuck into the house that they own. Because they put all the down payment into the first home they bought and they kept making mortgage payments on it. And now they might have a lot of equity left in it, but that's in the home. That's not a cash that they have sitting in the bank. And the second reason why down payment could still be a challenge is because they are moving up. They are buying a much bigger home, which would ideally mean, or which would typically mean, that you're looking at a much more expensive home. So maybe they have a little bit more money saved now, but now also they need more money because this is a much bigger house that they are buying. So a down payment challenge could still be there for them. Now, we were talking about the fact that education is something which is missing, or education is something which is lacking for a lot of first-time home buyers. And it's not a surprise that even second-time home buyers have the same feeling, in the sense that they still think that now that we are buying this bigger house, and it can be a jumbo loan or a much bigger loan, that we will need 20% down payment. In fact, most of the banks that you would go to, they will say that, hey, if you're buying $1 million house, you need to have 20% down payment. You cannot have anything less. And they keep living in that house thinking that, as in, of course, we can't buy anything until the time we have that much money. And there are loan programs that offer, especially we at Arcus Lending, we do offer very low down payment options, 10% down payment options, even at very, very expensive homes. So, though down payment is a challenge for move-up buyers, there are options around it that they should be able to buy because of low down payment options which are available.
So talking about mortgage, tell me if they can apply for 2 mortgages at the same time.
Yeah, so that is of course a challenge, right? When you're trying to buy your first home, you're trying to qualify for one mortgage because that's the home you're going to buy, that's the mortgage you're going to pay. When you're trying to buy a move-up home or a bigger home or a second home, now you already have a mortgage on the current home and you're trying to buy another home. So again, you would probably think that you have to sell the current home because now otherwise you're qualifying for the current mortgage, which is already a debt that you have. Exactly, and it's not just mortgage payment, which is a housing debt, right? Because when you own a home, you have to pay property taxes, you have to pay home insurance. There could be HOA dues that you have to pay, and all of that is counted in your debt. And your income hasn't probably substantially moved up in 5-6 years. Maybe for most people, incomes don't double in like 5-6 years or something. So your income has moved up only a little bit, but now you already have one mortgage, and then you're trying to qualify for the other mortgage, and that can be a challenge. And so you're right, as you rightly pointed out, that not just down payment could be a challenge, but also trying to qualify for 2 mortgages at the same time could be a challenge as well.
So they would have to sell the first one in order to get the other one.
So it's a challenge for sure, but they really don't need to.
Okay.
There are ways to get around it. So there are a few things that they can do. One is that they can put the current house on rent, and we could use the future rental income from the property. And they don't even have to rent it out while they are living in the property, as long as they have the rental agreement saying that it will be rented out once they move out of the home. We could use that as an income. So even though their income from their employment hasn't gone up, now they have a rental income that we can use. Of course, they can sell the home. That is another option that they have. And between those two, or sometimes it happens that when you're buying your first home, say if you're a married couple, one of the spouses are working while the other one is not. And so we have seen in a lot of cases where by the time they're ready to buy their second home, like both of them are working, so their income would have probably doubled or close to double. At that point of time, even if you don't rent it out, maybe you have enough income to qualify for both the first and the second mortgage.
So if someone is a co-buyer in a house, and if they want to buy another house, would that be a trouble for them? Being a co-owner in one house and then trying to get your own house?
Okay, so when you say co-buyer, is that person also on the mortgage? Did they apply for mortgage?
Yeah.
Okay, so whether you co-buy or co-sign or co-own, people use different terms for something like that, you are considered as if you are obligated for that mortgage.
Mm-hmm.
And so say if you make $10,000 a month and you have this mortgage where you are paying $3,000 a month, you are 30% down on your income already. Even if you have co-signed it, you are still 100% responsible for paying it. The only time you can get away from doing it is that if you can show or prove that you are not on the title of the property, meaning you don't own the property, you're just on the mortgage. You co-sign the mortgage, meaning you are not one of the primary borrowers on the mortgage, and somebody else who lives on the property has been making at least last 12 months payments. So you can show by way of canceled checks or wire transfer, whatever they have been using to make that payment. In that case, some lenders will make an exception and will not count that debt against you. But for most people, I would warn them against doing something like this. Doing that, especially early in your life, could probably get you out of qualifying for any loan forever, especially if your income does not really double or become really high from where it is. But in some cases, there could be an exception.
So that overall affects the credit score of the person.
It could actually, surprising as it may sound, the credit score can actually improve. A mortgage on your credit score can actually improve your credit score. So you don't want too many debts on your credit report. But something like a mortgage which has been paid on time does wonders to your credit score. So somebody who probably will, on an average, will have a 700 score if they have had mortgage for like, say, 12 months or something. They can expect that score to be up as high as a 740 or something.
Well, on that note, we'll take a break. Keep watching Mortgage Matters. Welcome back. You're watching Mortgage Matters with Shashank Shekhar. Welcome back, Shashank.
Hey.
Shashank, now in this segment, we have some of the questions by the viewers.
Okay.
So one question we have here is by Anujay Kumar, and he emailed us saying that, do I need to pay mortgage insurance if I'm paying less than 20% down payment? Also, is mortgage insurance tax deductible? What do you have to say to that?
Good question. Mortgage insurance is an integral part of mortgage lending. A lot of loan programs do have mortgage insurance. Let's first handle the tax deductibility part of it, and then I'll come to the first half of the question. Mortgage insurance is something which sometimes becomes tax deductible, sometimes it's not. The thing with mortgage insurance is that Congress needs to pass a bill at the end of a certain year to allow mortgage insurance to be tax deductible for the next year. We do not have mortgage insurance tax deductible for this year. That does not mean it won't be tax deductible in the future, but as of now, mortgage insurance is not tax deductible. The second part of the question was that if you do not have 20% down payment, and that's something we have been talking a lot throughout the show, that you do not need to have 20% down payment. You can still buy your first home, even a second home. But the question is that if that's not the case, then if you do not have 20% down payment, yes, you can get some kind of financing, but would you end up paying mortgage insurance? Mortgage insurance in some cases can be very expensive. And there are tons of loan programs, especially if you have really good credit scores. We probably have the largest range of no mortgage insurance, less down payment options. But most of these work if you have good credit scores. If you have lower credit scores, say under 700 or something, then you will probably be better off taking a mortgage insurance than waiving it. But if you have excellent credit scores, typically 720, 740 plus, then you will find a much cheaper option, even if you're paying less than 20% down payment, by not paying mortgage insurance. So the answer really is that no, you don't have to. Of course, depends on your situation, but in most cases, you do not need to pay mortgage insurance.
So now we have the next question by Shalini. She said that she still does not have a green card. Are there any problems in getting any of these loans on H-1B, or should she wait?
So when it comes to immigration status, pretty much all loan programs that we offer at Arcus Lending, we offer that to all kinds of immigration status. And by that, when we say all kinds of immigration status, we mean people who are on work visas, like H-1B, L-1, O-1, T-1 visas, or if they're green cards or citizens, of course. Now, the challenge that Shalini might have is that if she, say, walks into a bank or walks into a local lender, a lot of them do not have all the options available. If you are, say, a non-permanent resident, like H-1B that she is on. And one of the advice that I give to those clients where I, for any reason, not able to service them because maybe they are in a state where we are not licensed, is that let them know, whichever lender that you're working with, a bank or an underwriter or a loan officer, let them know about your immigration status right off the bat. Because a lot of people working in those places probably don't even know what an H-1B is or what a TN visa is, for example. And they might just assume that you will qualify on that visa. It has happened to us several times where 2, 3, 4 weeks into the process when everything was going right, and then someone got declined from a bank because they were on H-1B or EAD. And then they come back to us and we are able to help them with their loans after that. But why make that mistake in the first case anyway? So can she qualify with H-1B status? Absolutely. Pretty much, as I said, in fact, we don't even have any loan program where we specifically ask for a green card status or a citizenship status. But if she's working with another lender or another bank, she should be very careful in letting them know that what her immigration status is and if that's something that they accept. In fact, most of the time, she should not even take a loan officer's answer. She should ask the loan officer to check with his or her underwriter and get an answer to it because, again, most of the times loan officers don't even know what these different visa categories are.
All right. So next question we have by Indrajit. He emailed us saying that he's looking to buy a 1.65 million home in Bay Area. Okay. He does have excellent credit and income, but he does not have 20% down payment. Okay. He went to his bank and they don't have any loan options for him. Does he need to wait till he saves 20% down payment?
So good question, Indrajit. That's and 1.65, that comes from my neck of woods. I understand home prices are expensive in the Bay Area. And again, very similar challenge. As in, I work with almost about 80–90% of my clients do not usually have 20% down payment if they're buying a home in the Bay Area because of the expensive nature of the property there. Yeah. And at 1.65, I'm not surprised that his bank offered him no mortgage options if he does not have 20% down payment. I personally don't really know of any bank that has less than 20% down payment options at 1.65. For our Bay Area customers and for very high expensive neighborhoods, in California especially, we have a loan program where even up to about $1.85 million, we offer 10% down payment option, which is probably one of its kind. Again, there are very few lenders, if any, who offer a similar option. So there is hope for Indrajit, for sure. He can buy that 1.65, and he's saying that he has good credit scores. His employment and income is stable. Hopefully he earns enough to qualify for everything else. So if on all other parameters he qualifies, meaning we require 730 credit score for something like that, we of course require high enough income for him to be able to manage that kind of a debt. But if he has those two in place, then down payment shouldn't be the only reason he will not be able to buy. We will be able to offer 10% or a 15% down payment. And going back to the first question we had, remember there was, I think it was Anuja who had asked the question that whether if you're putting less than 20% down, do you have to pay mortgage insurance? So the great thing about this particular loan program for Indrajit, which is buying a 1.65 with 10% down payment, is that not just he gets to buy that property with such a low down payment, he does not have to pay mortgage insurance. So we do two loans. We do an 80% first loan, a 10% second loan, and our borrowers do not have to pay any mortgage insurance at all. So it's a great option, especially in very expensive areas, as I said, something like California or Bay Area properties.
So well, clearly Indrajit can buy that house, 1.65 million, by coming to Arcus Lending.
He can, of course. As I said, we have to figure out all other qualifications. Sometimes it's people think that they qualify on every other parameter and that they come to us. So I don't want to put his hopes very high, but from everything that he's telling us, it looks like that, of course, if you were to work with us, you should be able to qualify for that home.
Well, I hope Shalini, Anuja, and Indrajit, you have received your answers for your questions by Shashank. Viewers, if you want your questions to be answered in Mortgage Matters, you can email us at mortgagematters@arcuslending.com, or you can post your questions on Facebook page of Arcus Lending. Till next time, it's me, Kritika Aswani, and this is Shashank Shekhar, signing off from Mortgage Matters.